Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello. Welcome back to another episode of Reverse Mortgage Radio. I'm your host, Bruce Simmons, and your reverse mortgage professor right here on Legends Radio. Every week, I like to do my best, I should say, to break down what's really going on in the world of reverse mortgages in plain English so that you can make confident, informed choices about your home and your retirement. Today, I'm going to tackle one of the biggest questions I hear from homeowners, especially more in their 60s and maybe early 70s. They say, Bruce, should I get a reverse mortgage now? Or should I maybe wait? And that's a fair question because timing does matter, as you probably have heard me talk about this in the past. But maybe you've heard waiting a few years could let you borrow more money. Or maybe you've been wondering if rates will fall and then you might qualify for more money and possibly a bigger line of credit. So in this episode, we're going to unpack both sides, the pros and the cons of waiting compared to doing it now, so you can make an informed decision about what's right for you. However, before you can make any kind of decision, you really got to understand a little bit about what a reverse mortgage is and the very, very basics of how it works, because that does factor into the decision. I mean, it'll help you analyze, I should say, the decision that you need to make. So most of the time, reverse mortgages are FHA insured. They're insured by the Federal Housing Administration. And it's a loan that's called the Home Equity Conversion Mortgage, HECM, HECM. That's the name of the FHA insured reverse mortgage program. And it's overseen by HUD. So picture a big umbrella, which is HUD. Under that is a smaller umbrella, FHA. And under that is the reverse mortgage, along with a lot of other types of mortgages. But reverse mortgage is one of those underneath the FHA umbrella. FHA insures the loan. They do not make the loan to you. These loans are made by private companies, but we have to follow all the rules that FHA sets up. And there's a lot of them, okay? There's a lot of rules that we have to follow. But and it's for your safety and to make sure that the program is sustainable as well, too. But in a nutshell, most reverse mortgages are FHA insured, and they're specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home, not the equity. You could have a ton of equity and maybe not qualify for a reverse mortgage because you don't have enough, because we base the loan amount on the value of the home. And I'll get to that in a minute. But it's based on the value of your home, the age of the youngest homeowner, and the interest rates. Those are the three main factors. And it allows you to convert part of the value of your home into money that you can use, because you can't use your equity unless you convert it into spendable money. You're not going to be able to go to the grocery store or the gas station or the pharmacist and say, hey, I've got $300,000 equity in my house. I want to give you a little bit of it so I could get my medicine or my food or my gas. That ain't going to cut it. You have to have cash. Cash is king, especially on a fixed income when you're in retirement. So you got to do that. But a reverse mortgage allows you to convert some of that equity you've got, or some of that value, I should say, and turn it into cash that you can actually spend. The benefit of this over, say, a traditional home equity line of credit or a refinance is that there's no mortgage payment required on a reverse mortgage. You never, ever, ever have to make a payment as long as you do 5 things. You have to occupy the home that you're getting the reverse mortgage on as your primary residence. You have to pay your property taxes and your homeowner's insurance because the house is still yours. That's a huge misconception that still is out there. People think, well, the bank owns the house, and they do not. You own the house. It's your house. You have to pay the taxes and insurance, live there as your primary residence. You have to maintain the home, keep it in decent condition, and keep your name on title. You do those 5 things, you can never, ever be kicked out of the house, and the loan can never be called due, no matter what happens to the value of the home, your equity position in the home, interest rates, your loan balance, any of that stuff, okay? So that's the benefit of reverse mortgages. Now, this is not free money. You're still charged interest on this loan. The interest grows over time, but you're not paying it, so it gets added to the loan balance. Every month you get a statement in the mail or you look at it online, and you're going to see that balance getting bigger and bigger and bigger. You got to be okay with that. If you're not okay with that loan balance getting larger, you should not do a reverse mortgage. I always say reverse mortgages are intended to relieve financial stress, not create it. So if looking at that statement and seeing it getting bigger and bigger is going to cause you more stress than the benefits you get from the reverse mortgage loan, don't do it. You know, it's funny because some people will tell me flat out, yeah, I just really don't like that loan balance getting bigger and bigger. And then 2 years later, they say their situation hasn't improved because it rarely does. You know, you just don't have the resources and you don't want to work. Or maybe you do you go get a job at Rockies Stadium or something, you know, helping the people find their seats or whatever it may be. And you're just like, oh man, I'm tired. I don't want to do this anymore. I need to do a reverse mortgage now. Because if you refinanced your mortgage in 2020 or 2021, odds are you're going to be paying on that loan till you die. I mean, if you did a 30-year loan and you're 70 years old, you're going to be staying in there until either you pass away or you move to assisted living or something like that. Or you move into your kid's basement. I don't know. But that's just the way it goes. So if you want to pay a mortgage payment the rest of your life, you know, keep doing what you're doing. You say, oh, I got this great loan at 3%, and you can keep that. But of course, with that 3%, you still keep that mortgage payment, that $1,000 or $1,500 or $2,000 mortgage payment. Now, with a reverse mortgage, remember, you have to pay your own property taxes and insurance. So if you've got a $2,000 mortgage payment and your property insurance and taxes are $600 a month, and you say, hey, I'm going to do a reverse mortgage and save $2,000 a month, you're not going to. You're going to save $1,400 a month because that's the principal and interest portion of the mortgage. So these are things that you got to keep in mind when you're considering reverse mortgages. All right. That's, in a nutshell, basically how it works, okay? So what is the case for waiting to do a reverse mortgage? People will tell me, well, just this week, I took an application from somebody, and he says, you know, the Federal Reserve is supposed to lower rates next week. Should I just wait to do it till they lower the rates? Well, that's a whole nother, I could go into a lot of detail on that, and I have in the past in other shows. By the way, too, if you have any questions about reverse mortgages, I forgot to tell you how to contact me. You can reach me directly. Call me on my cell number. My cell number is 303-513-2748. 303-513-2748. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage here in Denver. And again, 303-513-2748. Or visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. You can go there and download a free consumer guide, get a free quote. You can gather a lot of information. You can watch video testimonials from actual customers of mine. A lot of good information on that site. But basically, people will say, well, should I do that? But the thing is, the way interest rates move, the Federal Reserve controls one interest rate, and it's an overnight rate. The way reverse mortgages work is you've got two different interest rates. It's kind of screwy, but one rate is the rate you'd be charged once you're getting the loan in place. Once you have it in place and you borrow $100,000, this is the rate you're going to be charged, 5.875 or whatever it is. Another rate is the rate we use to calculate how much we can loan you. And the rate we use to calculate how much we can loan you is based on the 10-year Treasury index. So sometimes the Federal Reserve will lower their rate and the 10-year Treasury index will actually go up. The higher the interest rate is on the 10-year Treasury, the less money you qualify for. A lot of times, like the interest rates have been coming down lately. That's because it's based on expectations. I've seen it happen where interest rates will come down the month before the Federal Reserve has their meeting, and then they have their meeting, they do exactly what everybody expects, and the 10-year Treasury goes up after that. So we just don't know. There's no guarantee. People in 2022, May of 2022, people, the rate started going up. People would tell me, and throughout the last half of 2022, I probably talked to, I'm guessing, 2-3 dozen people that decided to wait. They qualified for a reverse mortgage, but they didn't get as much money as they thought they should. And they waited. And then they said, rates are going to come down in 2023. Guess what? You know what happened. They didn't. They kept going up through 2024 even. So now they're holding kind of steady, going up and down. And I don't know what's going to happen. My crystal ball is broken. It was never any good anyway. So you just don't know what's going to happen. However, if rates do fall, you could possibly refinance your loan in the future to get more money on the loan. So you got to keep that in mind too. Is it a benefit for you to do now? Keep that in mind. If you could benefit now, you might want to consider it. And anyways, so technically waiting could mean more money available, but nobody, like I said, nobody has a crystal ball. If they don't fall, or even if they go higher, that wait and see approach can actually cost you money and time. Money in the fact that you're making a mortgage payment too. So also too, people will tell me, well, I'll be older, so I'll qualify for more money. The older you are, the more money you get. However, it's usually not a whole lot of money. If we count it as a year older, you might get $2,500 more money. However, if the interest rate changes by 0.25% up, it could cost you $10,000. So it's difficult to say, But what's important to understand is that the increase from age alone is usually very small compared to what you might lose if the home value goes down too, or the rates go up. Plus those extra few $1,000s in payments that you're paying too. They outweigh the benefits you would have enjoyed if you started the loan sooner. It's like no longer making mortgage payments or having a line of credit available to you. Those are some of the benefits you might get if you took the loan now as compared to waiting. You say, okay, well, I'm still paying on my mortgage. So if I continue to wait a little, my mortgage balance will go down. I'll owe less money. Now, sometimes that's the only option because so many people can't qualify for a reverse mortgage because we cannot loan them enough to pay off their existing mortgage. For example, let's say that I tell you, hey, we can loan you $150,000, but you owe $160,000 on your mortgage. Well, we have to pay off your existing mortgage first before out of the proceeds of the loan, just like any other regular refinance. When you refinance a loan and you owe $160,000, you get a new loan for $160,000, hopefully at a lower rate and a lower payment, then you're good to go. Or maybe you get some cash out, so they loan you $180,000 and you get $20,000 cash out. With a reverse mortgage, based on your age and the interest rate and the value of your home, if we can only loan you $150,000 but you owe $160,000, we can't do the loan for you unless you bring that $10,000 difference to closing. So that might be your only option. But people think, though, that they'll just pay down their house a little bit more. Let's say we can qualify you for $170,000 and you owe $160,000. So, well, that's only $10,000 more is all I'll end up with. Let me pay down my mortgage a while, and then I'll do a reverse mortgage. And that, I guess, that's true, I guess, but that's if everything remains the same too. And also, let's say your mortgage payment's $2,000 a month. Well, that's $2,400 a month that you're leaving in your pocket if you were to do $24,000 over the course of the year, you could have left in your pocket as compared to paying the mortgage payment and interest while you're waiting to get older and to get an extra $2,500 or something like that, and pay a little bit down on your mortgage. It doesn't make any sense. So yeah, your loan balance might shrink a bit by waiting, but your savings account shrinks as well. And you could get those, there's no guarantee you're going to get those dollars back. Okay. Also too, people will tell me, well, I don't really need the loan right now. I'm going to wait till I really need it. And it sounds logical, why borrow money before you need it? But there's something most people don't realize is that the reverse mortgage line of credit actually grows over time. It gets bigger. The longer it's in place, the more borrowing power you build. It's kind of like planting a tree and letting it grow before you need the shade. If you wait until you need it, you won't have time for it to grow. Okay. And two, it's a whole lot less stressful to get money when you don't need it and have it available for that emergency. Your furnace goes out and now you need $10,000. Well, if you've got that in savings, that's a nice little cushion to have. If you don't have it and you have to borrow it suddenly, then it becomes more stressful. All right. This one I really don't hear a whole lot of, but now and again, people that say, well, the cost might go down. They don't. They just don't. All right. Maybe the cost will drop if I wait. No, not really. Reverse mortgage costs have not gone down. I've been in this business 22 years and they've only gone up. In the appraisal fees have gone up dramatically. Credit report fees have tripled over the last 5 years. It used to be, $50 for a joint credit report. Now it's closer to $160. It's crazy how expensive things are. Okay. So now that we've walked through the reasons people give for waiting, let's look at the other side. The reasons acting now might make more sense for you. No guarantee, but they might. By the way, too, if you just tuned in, you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons, and I'm the reverse mortgage manager for American Liberty Mortgage in Denver here. You can reach me directly by calling 303-513-2748 or visit me online at reversemortgageradio.net, reversemortgageradio.net, or call me at 303-513-2748. All right. The number one reason for doing it now, you lock in your borrowing power before rates change again. Okay, remember how we said that the expected rate, that's that 10-year treasury, affects how much you can borrow? If it goes up, the amount you qualify for goes down. It's an inverse relationship. So by acting now, you lock in today's rate to calculate your loan amount, and you protect yourself from future hikes. We lock it effective as of the date of the application. Well, actually, we don't even lock it. We cap it. So if rates go down, like this customer I talked to this week, he said, should I wait to do it because rates are supposed to come down next week? Well, if they do, that's great. You still get to take advantage of it by starting the loan application this week. We're locking in this week's rate, I should say. And then, but if rates go down, we'll give you the benefit of that lower rate, which means more money to you. But if they go up, you're protected. It's capped, if you will. Okay. It's kind of like buying a plane ticket. If you find a good price today and you grab it, because next month it could go up. But here's the twist. If you take a line of credit today, let's say you start the loan application, you set up a line of credit, and the rates go up, your line of credit will actually grow at a faster pace because the growth rate is tied to the loan's interest rate plus 0.5%. For example, if you're being charged 6% on any money you borrow, the loan that's the money that's left over in a line of credit will grow at 6.5%. It's a win-win scenario there. All right. And the other thing too, keep in mind, the next point, you can stop making that mortgage payment today. Every month you delay means another mortgage payment that you're having to put out. You're paying it. Okay. And for a lot of people that retire, you're talking $1,000, $1,500 a month, or maybe even $2,000 or $3,000. By getting your reverse mortgage now, you can eliminate that payment immediately. And that's money that stays in your pocket. And for living expenses, travel, healthcare, savings, whatever it may be. Okay, point number 3, create a financial safety net now. Emergencies do not call ahead, all right? They just don't, like we talked about, and your furnace goes out on the coldest day of the year. Your car breaks down on the hottest day or coldest day. Your AC goes out on the hottest day. All these things happen when you need them the most, right? Having a reverse mortgage line of credit in place before you need it is like keeping a fire extinguisher in your kitchen. You hope you never have to use it, but if you do, it's ready. A lot of my customers tell me about the peace of mind that they have by having that extra money that's just there for emergencies. I mean, it's peace of mind. If you lose a job, there's layoffs. That happened a lot in COVID. People got laid off unexpectedly. They didn't already have the reverse mortgage, and they were working. They didn't need it until they did. So if you maybe you have an unexpected medical cost or you need to help a family member, your line of credit is standing by. So waiting until the emergency happens means you're reacting instead of being prepared. Number 4, you lock in your home value. I know the real estate generally goes up, but it does move in cycles. We all remember 2008, and I don't think we're going to have that happen, but real estate values have kind of flattened out. Some cases are going down a little bit. Right now, if your home value is strong, locking it in through a reverse mortgage can be a smart protection. So, just let's say you did the reverse mortgage in the end of 22, you would have capped it out. That's when values really topped out. And that's when interest rates were the best. So if you'd done it then, you'd be in great shape. But the next best time to do it is now. It's like planting a tree. Best time to plant a tree was 20 years ago. The next best time is today. So right now, if your home value is strong, locking it in through a reverse mortgage can be a form of protection. If prices dip later, of course, what would happen is the property value goes down a little bit, even just 5 or 10%. That's when you're going to need the money, right? And but it would reduce the available proceeds. So you capture today's higher home value before it changes. Odds are that's not going to go way down, okay? I'm not predicting some kind of a crash in the real estate market. I don't think that's going to happen. But the other thing, too, a couple other points real quick here before we move on, is it starts the clock, by doing it now, it starts the clock on your line of credit growth. The one surprise that people have the most is, for example, let's say your line of credit's $150,000 today. Next year, it grows automatically and keeps compounding over time. So if your interest rate's at 6%, your line of credit's growing at 6.5%. Now your $150,000 a year from now, if you didn't touch it, becomes $159,000. Okay? By waiting even a couple of years to open, you lose that growth if the property value stayed exactly the same. Now, if the property value went up, yeah, that's great. But if interest rates go up, then it kind of is a wash or maybe even a loss. So there's so many factors. There's moving parts. While waiting might give you slightly more access at the beginning of the loan, starting earlier gives you a whole lot more access over time, or it could, I should say. There's no guarantees. It's the difference between, planting a money tree now or 3 years from now. You'll always have a bigger tree if you plant it today. Again, the tree thing. What's up with that, right? All right. The last point I want to make is the peace of mind. Well, I touched on it already, but people always tell me the reverse mortgage it's not just about money. It's about freedom. Freedom from monthly payments. Freedom from worrying about what if, from watching the market or the news and wondering whether you can stay in your home comfortably. When you put a reverse mortgage in place now, you take control of your future instead of leaving it up to chance. That's really the key thing is in my mind. That's why I plan to do it early. I'm 60 years old. I'll probably sell my home in the next 5 years, and I'm going to do a reverse mortgage. I want to do it as soon as possible. But let's circle back real quick and wrap up this. Look at the cons again, okay, and one at a time, but now with both eyes open. So you're worried, right? Rates might fall And so you could get more money if rates come down. Yeah, they might, and they might not. Or they might fall real quickly and you don't jump on the bandwagon quick enough because you think it might fall again. It's like waiting for the stock market to peak before you sell. Meanwhile, though, your opportunity to lock in your home value and start building that growing line of credit could disappear. And also, too, I want to make this point again. I touched on it earlier, but you can refinance a reverse mortgage. Let's say you do it today and the rates crash again down into the 3s or 4s and property values skyrocket. You could refinance a reverse mortgage. Half my business in 2021 was refinancing people's reverse mortgages. So it's possible. And there's no guarantee because it has to make sense. We have to be able to improve your situation, but it could work. All right. The next point is you'll be older later. Yeah, but that only adds a little bit. And starting sooner gives you a head start on the growth that easily outweighs that little age bump. Also, too, there's a whole book that a financial advisor named Wade Pfau wrote, and he swears by the line of credit growth. He says the best time to do it is as soon as possible. Number 3, you'll owe less money on your loan later, but you'll have spent thousands of dollars in payments that could have gone into your retirement. And then again, you don't need it yet. That's exactly why you should do it now. The best time to get insurance is before the accident, not after, right? So keep that in mind. And then also, too, costs might go down. That ain't going to happen. They just don't do that. And, you can, again, if they do, it's possible to refinance. So in almost every case, the real question isn't should you wait? It's what might I miss by waiting? That's the thing. You're paying out more money every month on a mortgage payment, or you're losing out on growth of the line of credit if that's an option. Okay? So these are important things to consider. And I know I sound like a broken record. Hey, I want you to do it now. I just think it makes most sense for people. Now, the time it doesn't make sense is if you're planning on selling your house in the next few years. If you're not going to stay there, you don't want to do a reverse mortgage. Well, you can call me and we could talk about it because there may be another option that's not as expensive as the conventional reverse mortgage, and it could work for you. But most cases, it does not make sense to do a reverse mortgage unless you're going to be there for the foreseeable future. Okay, here's the bottom line. If you've been thinking about it and the numbers make sense, okay, that's the important part. There's real power in getting this set up, getting the reverse mortgage set up before you actually need it. Because when life throws a curveball, the worst time to build a parachute is after you've already jumped, right? If you'd like to find out exactly how much you can qualify for right now, or how much line of credit might grow over time, you need to give me a call. Give me a call. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage. My number is 303-513-2748. 303-513-2748. Or visit me online at reversemortgageradio.net. reversemortgageradio.net. Until next time, I'm Bruce Simmons, your reverse mortgage professor here on Legends Radio, reminding you that peace of mind is not about predicting the future. It's about preparing for it. Hope you have a great day, and thank you for joining me today.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.